Hello, good afternoon, everyone. Thank you for tuning in to the weekly Delphian meeting. So today's agenda, I'll go through the market update and then I'll update the earnings trades, a few charts. Joe is not on the call, he's off today. So it's just me. So we'll go through all those items and get done fairly early so we can, watch Fed and all that news come out. So if you have any questions, feel free to unmute and fire away throughout. All right. So overall indices here, you can see, we're still in state one across the board. We'll review, the Russell and the S&P. Green pie fairly flat from last week. 77 seems like it's kind of, flattening out a lot over the last week, right around that 77. We are, state one's 42. So our overbought is 45, so we're right near that. And obviously we're elevated on the green pie here. So let's take a look at the state ones. So what I got here, trying to make it a clear chart. This is state ones and state eights. So we're currently at 42. So the last time we got this high was back here. This is October, November of 2021. So that overall is a good sign, that we're making good numbers on the state ones, but we'll have to wait and see on that. Same thing with the new highs here. So those are kind of flip-flopping. We're getting nothing on the lows, which is, very bullish overall. So, things are, starting to show bullish overall for the market. Once we get above 45, then we're technically, by the Delphian standards, overbought. And that doesn't mean, crash or anything. It just means, pullbacks and, a lot of things are looking good, for the market overall. We got obviously all these lined up with ones. We're getting near, really bullish range on state ones. Pulling up the bullish bearish here. I will say kind of near term though, even though we're getting a lot of bullish signs for the market, we have kind of flattened out here. We're definitely elevated, at 77. So I'd just be careful, especially near term. We talked about this last week. We had a, and we'll look at the levels too for the indices. But we had a big drop and we're kind of right near where we were last week. But you can see here, the green pie, the bullish overall, pretty much flatlining. So not much movement at all. So, that typically, can be problems back here. This is very elevated in the 80s, but obviously we can go higher, but something just to be careful of, especially with the Fed day, see how things react. But I think that's it for bullish bearish. Obviously good divergence here. A lot of big bullish signs. So let's look at SPX here, state one, still well above the target. So, kind of near term, obviously our target 3 is support, 43.40. I would say, if we can make new highs, that's obviously a really good sign. So the high for this state so far is 45.80, 1. So we're close to that. I think we're down a little today. But we can break those highs, obviously continue higher. That's the only real short term for SPX, and obviously the 4,600 is the top of our range. What I wanted to pull up on this chart, the importance of the 50-day. So this was back in September. You can see had a couple breaks here, but really the whole time that 50 was, the way up. Obviously, a decent break here, and then breakdown was finally here. But so something we need to watch here. Same thing. We've shown good support on the way up. So that's your very important near-term support. And just want to kind of emphasize that because we talk about it a lot, but let's see. So our 50 days at 43.70. So that's above that target 43.40. So really your near term is here, and we're a good ways away from that. The top, of this range is 46. I don't think I can get it on this chart. Yeah, there we go. Okay. So let's do the lines real quick. Let me annotate. So there's no confusion. There's that 42. So once we broke above that, 46 would be, that's our range here, 42, 46. We're getting real close. So the top side, we have, this intraday high, 45, right around 80, and then 4,600. So that's going to be that 4,600. I think that's going to be a high level of resistance. So that's what I keep my eye on for SPX. So you get your downside, your upside targets, and the modeling. Obviously, no real good targets on this, but if it's in state one, just kind of emphasize this. These kind of moves, sustained upward movements, those only happen in state one. So like this, sustained upward movements. So we're in one. So this can continue. It's hard to call tops, obviously, but you just kind of want to watch the levels. 46, obviously going to be big resistance there. Okay, so that's it for SPX. Okay, so Russell, we talked last week, typical pattern, run up, pull back, run up. So we didn't have that much of a pullback here. So not exactly, but mirroring it fairly well. Normally we kind of test this level, the entry level, which is 1915, but haven't got that low at all. I think it's up a little today, but 2000, this is kind of intermediate resistance here. Let's call it the 2000 range. And obviously the high end is going to be 2150, 2100. And I'll pull that up on the chart here. Another kind of key thing here. So that was the last, I talked about higher lows, and I'll pull it out here, but getting above this level and holding 2009, call it, would be very important. Obviously, if we pull it out, we've been making higher lows on these breakouts above our 1917 range. And let me draw these real quick. So we've had a few breakouts above, from this range. So this is breakout one, breakout two, all kind of look the same too, where they like spike up, run out of steam, and then peter off. So this high here was 2030, call it. This was 2009. So this one didn't even get to 2000. So getting above, this kind of trend line, from here to here, I think, making new highs would be very bullish overall for the market. So that 2000 level, where that correlates, is going to be above that target 2. So getting through this resistance is going to be very critical. So we have this level of resistance, target 1, target 2 for Russell, and then SPX is that 4,600 to the upside. So downside obviously is going to be for Russell 1915 entry, and then 1900 is the big one. I mean, so yeah, 1900 will be the big one. So, is it possible we're going to repeat this pattern for a third time? It's possible, but if we make new highs, then that'll be broken. If not, look for that test of 19. So, and I think it's up a little today. Yeah, Russell's up a little. So, it's holding, but see if you can get to this level. That's going to be key. That's really the big thing. I'd be watching this. And then, if all markets start going up, I'd watch the SPX for that 4,600. So that's a quick on the markets here. Let's look at Fed. Obviously today, it's guaranteed 96% for quarter point. I wouldn't expect any more. We say, I think if it's over 80, the expectation going in, it's pretty much always happens. So, so we can expect another rate hike today for quarter point. And let's look at December, end of year. So it's kind of right now, this is where the current hike would be. So about 50, a little over 50% we're here at the end of the year, and with 33% above, which would be another hike, another quarter point hike. And we've been tracking this for a long time. I mean, I think months ago, like the average was like 4.5. So no one's factoring in cuts anymore. So the Fed is stuck to their message, which we thought they would, and the market obviously is priced that in. Okay, balance sheet. Oh, come on. Let's try this again. I don't know. This thing has gotten a lot worse from whatever they had before. So that's 5th. Doesn't look like they updated. That's the 12th, kind of no movement. So this has become less reliable. I don't know why. But they're continuing to run off assets. So I'll keep watching it, and sometimes they don't update it right away. There we go. One thing I want to pull up, we haven't looked at this in a little while. So here's our yield curve. So getting really good returns up here. 5, almost 5.5 for 6 months. 1 year, 5.4, 2 year, 4.88, call it. So it's about a 1%. When we look at the 2 to 10, it's almost 1. So I wanted to pull up a few old charts. So we pulled this one, God, I forget along, like this is basically when it first inverted, it was at 37. So it's dropped a lot since then. And here's the one I pulled up, long-term since the 70s. So I couldn't find an updated chart. Basically, we kind of went like this, and now we're kind of like right here. So it's still inverted. And it's gotten worse recently. So something to keep our eye on. Those rates, they keep raising the rates, but the 10-year, which is what really drives everything, it's at 3.9. It's like it got up around 4, then dropped back down to 4.75. That 4.75 seems like the new peg, not the 4.5. because when it get down to 5, it pop up. Seems like 375 is like the new one. But so you can see here 375 like pops up, 375 pops up. So it seems like it shifted up a quarter. But if these don't really, when you're looking at this, what does this really matter? If it's not reflected in the markets, everything's driven, credit card rates, mortgage rate, everything's driven off this. So, all this means is the banks can lend, get good money overnight from the Fed. Meanwhile, these rates aren't changing that much. So it's not reflecting as much in the economy, these Fed rate hikes. So it's kind of wanted to point that out. This is the key thing to watch. That 10-year, as far as, if we get another spike like here, and back here was the big one. I think we got up to like 4.3. So this is the key thing to watch here. This is where we get into trouble with the banks, things like that, when those rates go higher fast, like this one here.
Hey, Josh.
Yep.
It's Lee. What do you think are what do you think would be the indicators that would make the rate go back higher? Like, see where you're pointing right now, it's 4.213.
Yeah.
What's going to make it push up to that? What could happen? Economy, Fed.
I mean, that's a very complicated question.
Okay.
I mean, the default answer is, market forces. Now, what's involved in that? A lot. So I definitely couldn't off the top of my head lay out all the factors involved in there, but supply, demand, are the market forces. So if the rates are going up, the demand for the Treasury is basically going a lot higher, right?
Yeah.
So they'll be driving the rates up, and you can look at the auctions and things like that, right? So, we look at rates like this, the demand, like drove these a lot higher. Like these, obviously, this is like matches like the Fed, right? So the overnight is 5 something. So these kind of match that. Like once you get past here, kind of this range, this especially as you get further out, this is a lot of this is expectations of where rates are going to be. So people still think long-term rates are going to come back down, right? And we talked about this a lot with these, the expectations of rates. So if they start expecting rates to stay higher longer, then that's going to start reflecting in the market, demand, supply demand type stuff, to and get these things higher. But you saw how long it took for people just to not expect a hike this year. I mean, that was what, like 5-6 months. Now they're not expecting it. So how long will that, if we look at, I haven't looked out this far, but here now they're still expecting cuts like in June of next year, right? So that'd be 2 cuts. So this takes a while for market expectations. If they're not, but the Fed hadn't said what they're going to do next year. They're just basically saying this year, right? And they're going to fight it. And if they put out some statement like, "Oh, we're not going to raise next year either," then that's going to take a while to trickle through, and will eventually reflect here. So,
It just seems to me a lot of times people don't react in a normal way to what the Fed says they're doing. And what I'm really addressing is the credibility of the Fed. I think people are trying to outguess it, and as a result, indicators in the market, whether it's interest rates, whatever, aren't moving as though we would expect them normally to do.
right. Well, it's been a paradigm shift for the Fed, right? So since 2009, they've been stimulating. They've been doing QE, Operation Twists, suppressed rates and stuff like that. But now, they're pretty much doing the opposite, right? They're shrinking balance sheet,
Right.
keeping rates higher. So, how long they're going to do that, that's the real question, like how long is inflation going to persist? Are they going to keep going until they break something, like those charts we show? I don't know. It's hard to say.
Okay, thank you.
Mhm.
Hey, Josh,
Yeah, it's a good question, Lee. Yeah.
this is Dave, and just in regard to that back and forth conversation you just had with Lee, I agree that supply and demand are forces that determine the economics and the economy. But what I thought I heard Lee kind of inferring was what actions are going to really determine whether the interest rates go up more or not.
Yeah.
And with that respect, I have a couple of comments to things that you have already said. One is, where are we now? Where are we in respect to earnings and valuations, things like that? The other is the thing that will cause interest rates to go up is if the Fed raises interest rates, then they go up, period, the end. So if you look at that and say, well, what could cause the Fed to have to raise interest rates more than they're going to raise today? We're all assuming that they'll raise a quarter point today, so that I'm taking that as a given.
Yeah.
Well, if we're not one and done, which is what 90, however many % of the participants are thinking, I'm an options trader. So for me right now, the future of interest rates are 50-50. They could go up or they could go down. It's going to depend on whether the market participants are thinking that earnings are supporting the current prices of stocks.
Mm-hmm.
And I just looked at like the SPX and the Qs, because that's what I typically trade in, technology stocks and those kind of companies that are in both the SPX and the Qs.
Yeah.
And I look at, well, what caused them to go up when they went up back in June to like just till now, and most of that was up just a few stocks and a lot of the AI hype that was around those few stocks. And now I see earnings today from like Microsoft, one of the beneficiaries of all that hype. And it didn't jump up today. They were in line, I think, with earnings.
Yeah.
But the stock is down. I don't know, 3 or 4% from when I last looked. But it's just the first day, so it's a volatile thing when earnings are announced. But it feels to me like the AI hype might be leaking out of the balloon just a little bit. And investors, especially traders, are not happy with returns that they have to wait on. And when I listened to the Microsoft call last night, I noticed that the big decline came when they talked about, well, AI earnings, impact to earnings are going to be gradual. And there was a big drop off with that statement. I'm not sure that the trend is going to continue for some of those stocks that were all AI hyped, which was the reason for a lot of the price hike in the indices that are greatly affected by individual participants that have a large percentage of market cap, which was also the reason for the whatever change they did or didn't do, on Sunday when they said they were going to adjust some of those ETFs.
Mm-hmm.
A whole nother conversation. But so the impact on we already are banking on a 25% or 25 basis points increase today, and there's no FMC meeting in August. There's just the Jackson Hole conversation. So when the markets close this Friday, we'll have 1/3 or thereabouts of the SPX or the S&P 500 companies reporting earnings. And we should probably have some, I think the index bettors will be placing their bets on the future quarter on however Friday's close is for, those, the SPX compared to where it closed last week. My opinion anyway, we'll see. But the key is what happens to the price of the SPX between now and say Jackson Hole, which is, the next Fed talk, and the next FOMC meeting, which isn't scheduled to September. If the major indices keep climbing, even though the Fed comes out a little hawkish with the conversations and the conference call today after the hike, that would give me reason to short the market come September. If the market keeps going up and the Fed is still being hawkish, there's a good chance that there's another interest rate hike in store then, and we're not planning on any. So, to me, it's the price of the index and how it's reacting with no news leading into the possibility of not good news in the future that could predict a downturn in the future. Now we can be overbought for a long time, right? That's
right.
It exists.
Absolutely.
Yeah. So anyway, I think those are the conditions. If the Fed raises again, what is going to cause the Fed to raise again? If the market is going up, that means companies are increasing their prices, inflation's not going down. That would give them credence or reason to keep raising interest rates in the future if that keeps happening.
Right.
So we'll see if we can. But anyway, those are a little bit some of my comments on the way I see the future of the index in the next quarter. Anyway,
yeah,
sorry.
very well. No, that's great, Dave. I think it's very well laid out. I mean, like short term, very short term, obviously we're a little overbought. I think, medium term up until September, we all know September is like the worst returns, right? Historically that month. So, kind of medium term up till September is, kind of the bullish type setup here, with the 50 moving average on the S&P and stuff like that. So, we're going to get pullbacks and, kind of like what Sudhir, I think it said, kind of melt up.
Yeah.
I think September it's going to, where we have to be careful, obviously. That's historically the worst month for returns. And, it's a little over a month away. So, I think very short term, it looks overbought, but I don't think it's going to be like any kind of crash type scenarios. Once we get into the fall, obviously we'll know. Like you said, we have a couple months between meetings, and then, if the expectations are, I think let's look at September right now. So, obviously we'll be here because we're going to hike to here. So this is kind of the base expectation right now, 22% for another quarter. So we'll have to see, the headline, inflation, all that stuff. But, they keep raising. I think they, like my personal opinion, I guess told you they should have been done a while ago. Just let it play out, So
yeah, as long as that soft landing prospect is intact, I think we're going to see the Sudhir melt up keep happening, or maybe happening to a little bit lesser extent depending upon earnings. But I don't see a break in the a reversal in the market just because things might not turn out. Not until we disbelieve the soft landing will there be a significant sell-off, in my opinion.
Yeah. Okay. Thanks, Dave. Great comments. Okay. You only had one other kind of quick chart, just kind of we had talked about this a while back in February, right? The Dow Internet, like the head and shoulders. So this did not break. We're up here now. So it broke above that shoulder. So we don't have to, just wanted to kind of follow back to it. You know, it'd been in this range, you know, we see these big head and shoulders, and you know, if it breaks below, it gets real ugly. We're above, so we broke above this kind of shoulder area, so that can throw that whole thing off. But I think that that's just like another kind of bullish sign, you know, pulling back from there. So a lot of bullish signs, just, I mean, you know, for the market, it's what it's telling us. Well, the only real ones are, you know, we're getting near overbought, and this, you know, overbought here. And Joe sent me something. He said extremes, so over 70% in the green pie. So we're on day 8, and the average is 16 over since COVID, over 70%. So we're halfway into over 70% for the average. Here, that's first day there, over 70. So normally it's 16 trading days above 70. That's the average since COVID. So just another kind of stat. Thought it was useful to include it there. Okay, that was it for market. Any questions, comments?
Dave, again, one other thing that's not quite that, but it's a comment on the VIX, because that usually I have talked about the VIX or suggested looking at the VIX for a while now. And one thing I learned there were several, by the way, that was a good AI conference that we had last week that I listened to with
Oh yeah, with the shook.
with the Shook talking in. So
Yeah.
that was good. As a matter of fact, I think there were about 3 last week, all on AI.
Mhm.
But one thing that I learned from one of the other ones, there was a CBOE guy talking about AI, and one thing he mentioned that was really came up, hit me square in the face, is that there are about 43 at that time. He said the average number of VIX options, 43% of them are single day to expiration trades.
Oh Lord.
43% were 1-day trades on the VIX. They said that is one reason why the VIX is like, you know, it's not as good an indicator as it used to be for the overall S&P 500. I thought I would throw that out there. I think that destroyed my, you know, some of my confidence in using the VIX as a you know, somewhat indicator or impacting some of my trade decisions. Because
It's a gambling machine now, all 1 day. Like that's a lot of 1 days on there.
yeah, I kind of criticized the CBOE for like advancing that, because it kind of destroys the old relationship of if you had a stock you were trading and it was correlated to the S&P 500, you could use the VIX to somewhat determine the volatility of that stock. Now that's out the window.
Right.
Just thought I would mention that because I had no idea that the percentage of options trades on the VIX or on the S&P 500 were 1-day trades. I had no idea. It surprised me today.
Yeah. Well, I mean, you see a lot of that zero DTE talk everywhere. You know, that's 0 days to expiration. You know, that's the gamblers. I mean, that's all they're, you know.
Well, I've got a question about that.
Yeah.
And again, it's late. Do you think those are all retail traders, people like us out there, or is that? Do you think?
I'm sure. I'm sure a bunch of funds. You know, they figure something out. They can do. I'm sure they. I mean, it's a mix, like everything.
Yeah, the guy didn't say that, Lee. I would have been interested if he'd have said that, but he didn't. He didn't discriminate one way or the other. But a good question, though. Very good question.
All right, guys. Thank you.
Yeah. Okay. Yeah. Thanks, Dave and Lee. Anyone else before we hit earnings real quick. Okay. Let me close this. I'll just pull it up. This is the new interface coming along. Looks nice. So let's look at the virtual portfolio. So we rearranged a lot of stuff, renamed some things. So like stock overview is now Delphian analysis. And, all these trades, I'll show you guys this one, the trade scanners. So on this one, they're all separate. We had like state transitions, state targets, candlesticks. So if it loads. Let's give you a quick peek. So now we put them all, so it's a drop down over here. So you have targets, seasonal, unusual options, candlesticks, so you can select the drop down. You don't have to go all the different pages. We kind of redefined the layout a little bit. So I think it looks a lot better, a lot more usable. Changed a lot of things, but this is one of the changes we've gone through. And obviously we can add things in here, but just kind of want to show you guys what's coming.
I noticed the new look doesn't have the reset button on the time machine that the old look had.
Yeah. We're trying to minimize icons. So there was like this calendar thing here. There's just so many damn icons, right? Like, what are all these? So we're trying to minimize. You got a bell, that's an alert. Here's your help, and that's your profile. We're just trying to minimize the actual the icons for confusion. So
yeah, I noticed that, and if you do use that though, then it's not quite as nice to if you're like analyzing a trade that you did, then you have to remember what day you started with, which shouldn't be a problem for most people, but for me it's sometimes a problem. And it'd be, that was a nice little thing to have, is the automatic refresh to today's date.
Well, I mean, you can only go to today's date, so that's what I figured. So anyway, let's go into the trades here. So bullish pre-runners, quite a few open, not closed. We had our first loser. Sorry, it's a little slow. I'm sure our programmer's working on this right now. Yep, wait. Okay, so we got 5 open. This is 25th, 24th, 19th. So you can see all the earnings dates here. This one's coming up, void. So that earnings 27th, kind of right on. So not doing fantastic. These are up a little bit, down a few here. So kind of mishmash. Overall closed, we had 7 hit the profit target. We had 1 loss. That was the Travelers. And this is, there we go. So the Travelers closed out 113 loss, and then all the other ones hit their profit target. So it's a good start. You got 5 open, you got 7 closed for profit targets, and up about a grand on that. Okay. This is brutal. I don't know why it's slow like that. Okay. All right. I'll pull up the non-movers. So we had a couple, so we had those two that we covered in depth. So we've had three more pop open here. This one was yesterday, TFCM Taiwan, I think. Dave, you know that one, I'm sure. Corning and then NXPI. Those are all, these were on the 24th. So, you can see the price here. So GLW Corning, the mid is 33, so it's right above. So it was a pretty good, you get 9% overnight. And now, basically waiting for it. Possibly to come back down.
I have hit the profit targets. In
Yeah.
March.
Yeah, the intraday is a different, obviously. I'm sure this one did intraday, but I can only close out end of day data. So, basically like NXPI, I wanted to come back down to this area, 212. I think it's at 218. So it's down a little bit today. It was down further earlier. So I was watching these, but it's good to know, Sudhir. Those both hit your targets?
Yeah, they hit the 15% target for the trade rules. TSEM, I could never get to execute live. The bid-ask spreads were really wide.
Yeah.
And
I kind of noticed that, but we can.
I gave up on it. I didn't. The bid-ask spread went from positive to negative. I mean, the range when they show you on the live platform, they show you the midpoint and the natural. The natural was a negative number, which meaning a debit, and the midpoint was, where I had set the trade, and I lowered it a little bit. I could just not get it to execute, so I gave up on it.
Yeah, maybe I'll pull that one from the list then, because I noticed that also.
Yeah.
If you can't
But
trade it.
GLW and NXPI hit profits. I think GLW was a day and NXPI was a day, 2 days, something like that. So on intraday there.
Yeah. That's good. Yeah, these are usually good trades. So trying to think what else closed out. I think that a bullish runner. The bearish trades have been working out so far too, which is nice. Yeah, got one open here. Nike, not sure that's going to make it. Just kind of dead. Okay.
By the way, NXPI is a Swedish company, so it's not a US company. That might or might not have some impact as well.
They're based in the Netherlands.
Oh, sorry, I said Swedish. You're right. My bad. You're right. Netherlands.
Yeah. Yeah, I've been following this Nike one. Yeah, we're getting a little pop, so that's good today. So we're back at a little above entry price, so that could be good. So this one has been kind of hanging around there. The other two obviously hit the profit target. Goldman, that was a quick one. Both these were pretty quick. Delta. So earnings has been good. We had that one loser pre-runner, which wasn't a big one. That's what you always want to, hopefully miss any kind of big losses, but so far so good on the earnings. Sudhir, you're seeing the same thing?
Yeah, the earnings are doing good.
Yeah. Maybe it's just the Q1s we got to be more careful of in there. I think
this quarter they're working out pretty well, and I'm kicking myself for missing the trades that were good during my Brazil trip.
Yeah. Well, we're getting some good bullish action from the market, so that's always that always helps. But the bearish ones have even been every bearish trade that's come out has hit. So okay. I guess it was the pre-runner. Sorry. Okay, well, I'll open up to general questions, comments on earnings or anything else. Yeah, there's your two. Roku, a nice price drop there. Both them, the bearish pre-runners hit. It's nice. It's nice when they both hit, the bullish and the bearish. So far, so good. Okay. Anyone else got anything? All right, we'll close it up so we can get some Fed, watch the Fed. So thank you all. We'll see you next week.
Thank you.
All right, thanks.